Nothing in this recording is intended as investment advice, and the people in this recording may hold positions in the companies they talk about. Do not make any investment based solely on a tip or recommendation. Please do your own research.
Hello and welcome to Zak's Traders Cafe. Today I'm joined by Mark Bartlett, as CEO at Strix Group. How are you today, Mark?
Hi, good morning.
Your interim results have come out today, and I presume you are celebrating in a very discreet fashion. Maybe you can run us through the highlights.
No, certainly. It's been a very busy first half of the year. I think we've had a very robust performance. Strong growth in PBT for the first half of the year, and I think that reflects some of the restructuring changes that we put in place to really sort of make sure we are focused on the most profitable areas of growth. I guess a very strong area for us has been the net debt leverage. We committed to really focus on that over the last 12 months. And we've seen very positive improvement in that. We actually had targets to get to below 2 times as quickly as possible and 1.5 by the end of 2025. Actually, we've exceeded those targets significantly through our own cash management and by the reverse equity raise we had earlier in the year. So we actually ended the first half of the year at 1.76 times, significantly ahead of our targets.
Well, your market cap is nearly 200 million, which is quite a significant number. The shares have improved from sort of around 50p, I think, at the end of last year to nearly 85. So you have certainly had a recovery both in market valuation as well as the fundamentals. Do you think that the average private investor is fully aware of your company and what you do?
I still think there's some more information to get out there, to be honest. I mean, the share price where it is, I believe Strix is still quite significantly undervalued. So there are still a lot of opportunities there. I do think that we have taken a lot of effort over the last 6 to 8 months to really rebase this business to make sure that we are structured for the profitable growth going forward. And I think this is quite a turning point for the business. We've had a long period of time where cattle markets have really not delivered because of the macroeconomics. First half has actually been very good for the cattle market. So we have seen a lot more optimism in the market, both from brands, retailers and the OEMs themselves. That's not to say there's a full recovery yet. It's too early to say that. But certainly it's a much more optimistic outlook than it was.
And the other point, I suppose, related to my previous question is that many of the stocks on the London market are resources based. They can have investors sort of flying on by the seat of their pants. And you seem to be a rather more steady ship for people who are trying to cut down risk in volatile markets.
Yeah, I'd really like to think so. We are obviously an international business. We're selling to over 100 countries around the world. So that does give us some stability. But certainly the markets, particularly the small domestic appliance market where we are mainly trading, seems to have stabilized quite a lot over the last 12 months.
In terms of the next 12 months, what can you tell us about your goals for that period?
As I say, I think we've taken time to make sure that we've rebased the business. There's a number of things going on in our business. I mean, we've got 3 different divisions, so probably worth just touching on each of those very quickly. In the cattle side of the business, as I say, there has been certainly more optimism. We've got 2 new developments that we've been working on. One is a new low-cost control that was launched in August of this year. I mean, that will improve our addressable market in some of the unregulated markets, places like China, for instance, where we will be much more aggressive against some of those competitors. We've also brought out the next generation control, and we started actually taking that around the OEMs. That's targeted at our regulated markets and will give us opportunities in some adjacent markets as well, particularly some of the smaller appliances, both protecting our margins in the regulated market, but also actually much better from an environmental point of view, both in the commodities and materials used, but also in the size of the appliances that it can be fitted in as well. So a lot of things going on in the kettles, as I say, a lot more optimistic. And we are seeing some positive signs from brands and retailers around the globe. On the Billy side of the organisation, obviously that was the more recent acquisition, performing well. Again, we've sort of restructured that for growth. We had a bit of a delay in the first half of the year on some of the new product developments, but I'm pleased to say they're all out there now. So we'll start to see those ramp up in the second half of this year. And we're also getting quite good success in the expansion into Europe with contracts being signed with some distributors to enable that growth in the European side as well. So there'll be more of that to come. And longer term, we'll be looking to go more into that residential sector as well within Billy. And then finally, on the consumer goods, I mean, that's probably the part of the business that's had the most restructuring. You really have focused on the profitable growth area. Sorry, I think we've got a bit of delay in the text there. Sorry. So yeah, we've had good progress with some of the major brands in the consumer goods, and we've actually just started to produce appliances in our China factory for one major brand where we've got a very significant contract, which will actually go into mass production in Q4 of this year, and we look to expand that going forward into next year as well. So I think a lot of positive signs and a lot of activities for next year. So yes, definitely we feel a lot more confident moving forward with the strategy that we have in place.
Mark Bartlett, CEO at Strix Group, thank you very much indeed.
Thanks very much, Zach. Appreciate it.